I work for the Entrust Group, and we're going to talk about self-directed IRAs. And so hopefully in the next 40-45 minutes you'll have a really good understanding of how you can use your retirement account to invest in alternative assets. And you'll understand what I mean by that. I want to thank Kevin and Stephanius for bringing me in here. They've actually have been referring some clients to Entrust now for, I don't know, a couple of years. That have used their IRAs to invest with Equilibrium. And so, again, we'll talk about that. Feel free to ask questions as we're going along. You don't have to wait till the end. So if something comes up, feel free to holler out or raise your hand. This is called Introduction to Self-Directed IRAs. Legally, I need to put this up. My company asked me to do this. Entrust, so we are not financial advisors. We don't give advice. We don't recommend any particular investments. We don't promote, endorse, or sell investments. We are custodians and administrators for self-directed retirement accounts, and I'll explain what that is. But for anybody here who is considering making an investment, whether it's with Equilibrium or anything else, we always encourage you to talk to an advisor, a CPA, or a lawyer, a friend, a family member that would give advice. But Entrust as a company, if you want to use your IRA to invest in Equilibrium, we're not going to do any due diligence on the investment. We're not going to do any financial advice. But we've been in business for a long time. We're headquartered out of Oakland, California. We focus on education, so I'm going to educate you on how you can use your retirement account to invest, and that's what we do. We're custodians for the account. Again, not advisors. We are the only company in our space that has a continuing education class that we provide for CPAs, realtors, and certified financial planners. And we actually have a class that we teach other companies in our space how to pass the certified IRA. The CISP stands for Certified IRA Service Professional. So I just want to really educate. We are big on education. It's a reputation that Entrust has in our industry that is very well deserved. So we're going to talk about what a self-directed IRA is, what are the benefits, what different plan types there are that you can self-direct, different investment options, what's disqualified persons and prohibited transactions, pretty important to know when you're talking about self-directed IRAs. Give a few examples and then how to get started doing it, and then Q&A at the end. But again, if you have questions that come up, feel free to ask them. So what exactly is a self-directed IRA? So before, who here has heard of self-directed IRAs or has familiarity? Not very many of you. Okay, so everybody here have a retirement account, an IRA or a 401k, 403b, right? I'm guessing that you have that account with a bank or a brokerage firm, Charles Schwab, Fidelity, Merrill Lynch, somebody like that, correct? And that within that retirement account, that bank or brokerage firm gave you a list of mutual funds and said, these are some investments that you can make, right? And they'll say if you have a certain risk tolerance, you may want to invest in this fund, or if you're at this age, you might want to invest in this group of funds. And then you go, okay, that sounds good, and then you buy the funds, and now your IRA owns those mutual funds, right? And if it pays a dividend or whatever, all the money goes back into the retirement account. So because most people who have a retirement account have it with a bank or brokerage firm, most people think that the only thing you're allowed to invest in inside a retirement account is publicly traded stocks, bonds, and mutual funds, because that's what those bank and brokerage firms limit you. They only let you invest in publicly traded stocks, bonds, and mutual funds. But actually, the IRS says you can invest in pretty much anything you want, but you need to have your account with a custodian who's willing to hold whatever asset you want to invest in. And so those custodians, that industry is called self-directed retirement accounts. So it is an account in which you make all the investment decisions. So as I said, Entrust doesn't give any advice. We don't sell you any investments. We don't help you find an investment. We don't recommend it. You have to do the due diligence on the investment that you want to make. But if you want to invest in an alternative asset, so you can diversify outside of the traditional stock, bond, mutual fund. So if you want to invest in real estate, if you want to own rental property inside your retirement account, you're allowed. You need to have your account with a custodian like Entrust. If you want to invest in a private fund like Equilibrium, you're allowed to do that inside a retirement account. But if you went to Charles Schwab or Fidelity or Merrill Lynch or Vanguard or whoever you have an account with and say, hey, I found this great fund, this Equilibrium private equity fund, and I want to invest in this, they'll say, we don't do that. They might even tell you you're not allowed to do that, which is not true. You're certainly allowed to do that, you just can't do it with them. You need a custodian who's willing to hold that asset. Yeah?
If you have like 200 grand with Charles Schwab
Yeah.
in mutual funds, you sell that off. Is that transferable into Entrust?
Yes.
And then a real estate property can be invested?
Exactly, yeah. So the most people who fund an account with Entrust, they transfer or roll over from an existing IRA or 401k. So the self-directed IRA, it's still an IRA, it's still a retirement account. So, but just like you could transfer funds from, like transfer cash from Fidelity to Charles Schwab if you wanted to change custodians, you can transfer from Fidelity to the Entrust Group. We are a custodian of the retirement account, so it's just an IRA to IRA transfer. So there's no tax consequences, you're just changing custodians. Again, but with Entrust, you can hold alternative assets. So, like I mentioned, real estate is very popular. People buy rental property inside the retirement account. People invest in private funds, very, very popular, or private companies. People invest in precious metals, in promissory notes, in tax liens, trust deeds. We had somebody invest in a racehorse one time inside their account, in cattle, in a bowling alley. I mean, if you can imagine it, as long as it's for investment purposes, you're allowed to do it inside a retirement account. So in order for it to be a retirement account, the securities, all the investments have to be held by a custodian, right? For it to qualify as a retirement account, by definition, you need to have a custodian. So that's Entrust. We are the custodian of your retirement account. So what are the benefits? Well, you make your own investment decisions. As the scenario I mentioned earlier, you have an account with a brokerage firm and they give you a list of mutual funds and they say, hey, we recommend these 3 or 4 funds because you're this age or you're this risk tolerance. But what do you really know about those funds? I mean, do most people really do the due diligence and see what the fund's being held? No, you trust the broker, right? In this instance, you guys are here educating yourself about a different investment opportunity. So if this is something that you think is an investment that you want to make, again, my whole point of being here is just to let you know, you're allowed to do that inside a retirement account if you want to do it, but you need a company like Entrust to process that through. So it gives you the ability to invest in what you know and understand. I do a lot of presentations to realtors, realtor associations, realtor offices with the, promoting the idea that, look, you guys are experts in real estate. You would think that you would at least consider using your retirement account to invest in real estate, right? It's an asset class that you're most comfortable with. You probably run across opportunities all the time. So we're just, again, spreading knowledge. You can do that investment inside your retirement account. It allows you to diversify outside of stocks, bonds, mutual funds. Again, you have an account with a brokerage firm, and they may recommend 3, 4 different funds and say, look how well diversified you are. But typically, if the market goes up, all the funds go up, maybe at different percentages, but they tend to all move in the same direction. If the market goes down, the stock market, broader market goes down, they tend to all go down. They're all moving in the direction that the stock market is moving. But if you hold some in stocks, bonds, mutual funds, you also hold some maybe in real estate, you also hold a private fund that's investing in real estate, the stock market could go up or go down, but the fund that you're holding, because it's not tied to the market, might not go in the same direction. Precious metals is known to be a hedge against the stock market. When the market goes up, metals tend to go down. So we have a lot of people, and if you want to hold actual physical metals, actual physical gold, physical silver inside your retirement account, you can't do that with the brokerage firm. You need a company like Entrust, right? And then you get the tax benefit. To give real estate as an example, if you buy investment property, like personally, you buy it outside your retirement account and you're getting rental income that's coming in, at the end of the year you got to report that rental income and then you deduct any expenses and you depreciate and you get either a net gain or a net loss. And then eventually at the end of however long you want to hold that, you sell that property, right? You sell it, I'm talking about you personally own it, not inside a retirement account. You sell that property. If you don't want to pay capital gains tax, what do you have to do? Do you know? 1031 exchange. I heard somebody say it. Right. So if you want to avoid capital gain tax, you have to do a 1031 exchange. But if you do it inside a retirement account, the IRA is the entity that buys the property. The IRA is the entity that sells the property. Everything is occurring inside a tax-sheltered account. So if you buy a property inside the retirement account and you rent it out for however many years, the rent checks don't go to you. The rent checks go to your retirement account. They go to us, and we deposit them in your account. If you have expenses like property taxes, insurance, utilities, that type of thing, you don't pay them because you don't own it. The retirement account pays those bills. So the bills come to us, we pay them from the account. Eventually, if you want to sell that property, the retirement account sells it, all the revenue goes directly into the retirement account. You don't have to 1031 exchange, you don't have to find a more expensive property. The cash just goes back into your retirement account, and you either did or didn't grow the retirement account. And that's the whole point of a self-directed IRA is everybody who's trying to have a retirement account, you're trying to grow the retirement account. So this is simply, if you think real estate or a private fund that invests in real estate, or whatever you want to invest in, precious metals, or a startup company, or maybe you have somebody that you want to loan money to and draw up a promissory note. All those are allowed to be done. If you think that's the best way to grow your retirement account, or at least to diversify, you're allowed to do it. You need to do it with a company like Entrust that's willing to hold it. So whenever you open an account with us, you still have to choose a type of retirement account. You still have to choose a traditional, a Roth, a SEP, a simple. We also have an individual 401k. You can also self-direct health savings accounts and educational savings accounts. So we have all these accounts. So I've lost count of the number of times that somebody's opened an account with us and they're going to open the account and they're looking at our account application. We say choose a plan type and they call me up and say I don't see self-directed as an option on here. But it's because self-directed is not a plan type. It's a industry term that means you pick your investments and you can hold alternative assets, but you still have to choose a plan type, right? So you can self-direct a traditional, you can self-direct a Roth, you can self-direct a 401k. All these can be self-directed, so when you open an account, you still have to choose an account, and then you can use it to invest in alternative assets. Yep.
So if you're absolutely new to this and you have no idea how to pick it, would your company basically assist us in understanding how to make
Which
it?
account?
Or we just have to do our own sort of
No, I mean, I can explain, yeah, that's a good question. So she asked if you don't know which account you're supposed to do, then, do we help with that process? Certainly, I mean, I can explain to you, I'm not going to tell you which account you should use, but I can explain to you the different rules. Honestly, the way that the account is going to be tied to how you fund the account, right? Like if you're transferring over from an IRA, you're going to have an IRA that's either a traditional, a Roth, a SEP, a simple, and so you're just going to transfer to the same account. 401ks typically roll, it's usually a traditional IRA, it's usually either a traditional or a Roth. But if you're a business owner, right, if you're an independent business owner, then you get into like being able to open a SEP or a simple or a 401k. It allows higher contribution limits, and I can talk to you about the different rules, but ultimately what's best for you, we always say you should talk to a CPA, right? Like to decide what best account for you would be a discussion to have with an accountant. But I certainly can talk about the differences between the two and the contribution limits and that type of thing. Yep.
If you buy it through a Roth IRA,
Yeah.
then you avoid
Tax-free.
Thanks.
So Roth IRAs, for those who don't know, so traditional IRA, SEPs, simples, individual 401ks, pre-tax contribution. So you get a tax deduction, it lowers your taxable income when you make a contribution, but it grows tax deferred, which means at some point when you take a withdrawal from the account, you have to pay taxes on the withdrawal. Roth IRA, post-tax contribution. You don't get a tax deduction when you make the contribution, but it grows tax-free. So the question, if you bought real estate in a Roth IRA and all of a sudden it booms and goes up to, buy it for $100,000, all of a sudden it goes up to $1 million or something like that, and you held that inside a Roth, you never have to pay taxes on those earnings, right? As long as you've had a Roth for at least 5 years and you're over 59.5. But yeah, all those tax savings, again, the self-directed is not, it doesn't change the tax rules, it's still all the same, right? Do you have another?
I'm sorry, you said over 59.5, meaning
For a Roth,
when you can take it out
without paying tax, right? So a Roth IRA, the IRS rules state that you have to have had a Roth for at least 5 years and be over 59.5. If you withdraw prior to that, then you're going to get taxed. It's treated like a traditional.
If there is $500,000 in one of those accounts, so
Yeah.
401k,
Yeah.
individual 401k,
Yeah,
and it's pulled into a self-directed IRA account.
right.
For example, I'm a dentist. I own a dental practice.
Yeah.
I wanted to buy another dental practice
Right.
with this $500,000 and pay myself a salary.
Yeah. We're going to get to prohibited transactions and disqualified persons, but that's called self-dealing. You're not allowed to do that. So investment that you make in your IRA has to be purely for the benefit of the IRA. You can't get a personal benefit, but we'll come back to that when we get to disqualified persons and prohibited transactions.
Yeah.
I have a question.
1 second.
For a Roth IRA, so if you purchase real estate within the Roth, and let's say you don't have enough funds in that Roth to fund the entire thing,
Yeah.
you kind of combine funds from like a Roth and traditional?
Yeah. That's called partnering in our industry. You can partner your IRA with other IRAs. You can partner with yourself on a new investment. Like if you have certain money in your savings account, certain money in your IRA, you want to buy a rental property, or you want to invest in equilibrium, assuming equilibrium allows it, but you can take like your IRA and yourself, and your IRA would be a percentage owner and you would be a percentage owner, or your Roth and your traditional, and they would each be a percentage. Again, I'm going to use real estate as an example because it helps explain it the best. But let's say you want to buy a property for $100,000, just to throw out a number. You have $50,000 in your savings, $50,000, or $50,000 in your traditional, $50,000 in your Roth, right? So on title on that property, it would be the name of your IRA with us is the Entrust Group for benefit of your name and account number, right? So you'd have the Entrust Group, FBO, your name and account number, as to an undivided interest 50%. So you'd have the account number for the traditional. Then you'd have the Entrust Group, FBO, your name and the Roth account number 50%, right? You just detail the specific percentage ownerships. An IRA can also borrow money. If you want to buy an investment, particularly when it comes to real estate, and you don't have all the money you need, there are financial institutions out there that will lend money to your IRA. Your IRA can obtain a mortgage to buy a property and then receive rental income and then pay the mortgage back, right? That all can be done. There's not a lot of them. You're not going to go to Wells Fargo or Loan Depot and have them lend money to your IRA, but there are some out there that do that, yeah.
Age limitation on opening a self-directed IRA?
Age limit on opening, I mean, whether it's self-directed or not, there's no age limitation on, well, traditional IRA, yeah, 70 and a half, because that's when you're subject to require minimum distributions. There isn't really an age limitation on when you can open an IRA, but there are restrictions on when you can contribute to an IRA, right? It's not really about opening, it's about being able to make contributions. And so because there's required minimum distributions at 70 and a half, you can't contribute to a traditional IRA at 70 and a half. You can't a Roth. But you have to have earned income in order to contribute to an IRA. Okay, yeah.
There's limits on the Roth, right? You have to make under certain.
Yeah, there's income limits. Yeah.
So if you fund your Roth in the beginning of the year, let's say, because you thought you were going to make something, and then you ended up making more, and you pass.
Yeah.
You already funded it.
Yeah.
What do?
You have to recharacterize it over to a traditional IRA. You have time to do that, but it has to be in the same tax year. So by the end of the year, if you make that, you have until April 15th to recharacterize it back to your traditional IRA. But for people who have excess income that can't contribute to a Roth, there's actually what's called a backdoor Roth. It's a really easy workaround. Just make a contribution to a pre-tax traditional IRA and then convert it to a Roth the next year. So get the tax deduction 1 year, then pay taxes the next year, and just convert it. It's called a backdoor Roth. It's really easy.
You go to the traditional IRA?
Contribute to a traditional,
And then,
get the tax deduction.
Okay.
The following year, convert it to a Roth, pay the tax
even in
back.
the following year, you make $500,000 a year.
You can convert from a traditional to a Roth anytime. There's no income limits to do conversions. There's only income limits on contributions.
So you convert from a 401k to a Roth?
You'd have to roll over from a 401k to a traditional, then convert from a traditional to a
And
Roth.
those transactions, you have to pay for them?
No. I'm going to focus on bottom bullet point, almost anything. It's literally true. You can invest in almost anything you want inside a retirement account. It just has to be for investment purposes. It's a lot, and we listed a lot of real estate. Private funds, I mean, we're obviously here because, Equilibrium offers a private investment fund that invests in real estate. So, the most popular investments in self-directed industry is real estate, private equity, and precious metals. And private equity that invests in real estate is also so if you took that, and real estate's very, very popular in a self-directed industry. These are the only things you're not allowed to hold inside a retirement account: collectibles, life insurance, and S corporations. So collectibles, work of art, rug. We have an asterisk, metal, a gem, or a stamp and coin. There's a difference between investment grade precious metals and collectible, like coin collections, right? And it's based on the purity or fineness of the metal, right? So the dealer that you buy from will either be selling investment grade that you can hold inside an IRA, like bullion, or they'll be selling like collectible, which you can't hold inside a retirement account. So it says any work of art, right? So you can't hold an actual physical painting inside your retirement account, but you could invest in an art gallery, right? Because that's a business. You can't hold wine, you can't hold bottles of wine inside your retirement account, but you could own a winery, right? Because one's a business. So those are the only things: collectibles, life insurance, S corporations. Aside from that, if it's for investment purposes, you're allowed to do it inside a retirement account. Okay, let's get into disqualified persons. Who's a disqualified person? You, your spouse, your ancestors, your lineal descendants, and spouses of lineal descendants. So parents, grandparents, great-grandparents, children, grandchildren, great-grandchildren, etc. So what that means is that your IRA isn't allowed to, an investment inside an IRA can't benefit any of these people. So I'm going to give you some really basic examples. If you buy a rental property inside your retirement account, none of these people can ever stay in the property, right? None of these people can ever work on the property. So if you want to buy a property inside your IRA and you want to go in and redo the kitchen, you can redo the kitchen, but you can't do the work yourself, nor can any of these other people, right? You have to contract that out, and then the IRA has to pay it, okay? You can't buy property from a disqualified person. Your IRA can't buy property from a disqualified person. So if you have a rental property that you want to convert into your IRA, too late, you already own it, you're a disqualified person. And you also can't sell a property to a disqualified person, which means if you own a property inside your IRA, you can't buy it from your IRA. You can take it as a distribution, but you can't buy it, okay? So prohibited transactions, I'm not going to get too caught up in this, although we had one person here who ran into a little bit issue, this 10% more partner and having a plan and being able to make an investment, but we were able to work around it. But the focus is any improper use of an IRA planned by the plan participant or disqualified person is a prohibited transaction. So here's some examples. Borrowing money from a disqualified person. Your IRA is allowed to lend money. You can create promissory notes, have your IRA lend money, but it has to lend to a non-disqualified third party. So you can't borrow money from your IRA. You can't borrow money from a 401k, by the way. There's a difference between a 401k and IRA from this standpoint, but with a 401k, you can borrow up to $50,000 and it has to be paid back within 5 years, right? But it's only 401k plans that are allowed.
What about a SEP?
You can't borrow from a SEP, it's an IRA. A SEP is a type of IRA. Selling property to a disqualified person, right? Your IRA owns a property and then you want to sell it, you want to get the revenue back, that's fine, but you can't sell it to yourself, your spouse, your parents, your children, etc. You can't go to a bank and say, I want to borrow money and I'm going to use a property held inside my IRA as collateral to borrow money, right? The IRA itself can go to a bank and borrow money and use the IRA or use the property as collateral, but you personally can't borrow money to yourself using your IRA or any asset inside the IRA as collateral, okay? And then buying property for personal use. This is probably the most frequent question I get, and to some extent it runs along your question about the dental practice, right? Paying yourself a salary. You can use your IRA to buy a dental practice if you want to have an investment, right? But you can't work for the dental practice, right? You can't, whether you pay yourself for a salary or not, you simply can't work there, right?
You simply can't work there, but would you be able to own it?
Your IRA can own it, yeah.
The IRA, so if I
Yeah.
open up a dental practice with the IRA money, I can have associates working for me and be an owner.
And your IRA would pay pay them this, like the IRA would own the business, which means all your revenue at the end of every month would go back to the IRA, right? Yep. Okay, any questions about that? It's important. Prohibited transactions with disqualified persons is really important. Investing in a company owned by a disqualified person. So you can't use your IRA to invest in your own personal company, right? Although there is a program that the IRS has in place called Rollover for Business Startups, ROBS, that does allow you to help you fund your own business through a retirement account, but that account has to be a 401k and the business has to be a C Corp. So there is a way actually to invest in your own business, but there's very strict rules on how it works. It has to meet this ROBS qualifications requirements that the IRS has. So what are examples of acceptable transactions? Partnering with yourself on a new deal. So this is one of the things I talked about, and the key is on a new deal. So if you own a property personally, and you decide, you know what, I want to have my IRA come in and own 50%, I want to partner with my IRA on this, it's too late because you already own the property, right? So you can't just add your IRA or bring your IRA in as a partner. But if it's you're buying a brand new property, right? You don't own it, your IRA doesn't own it, you can come in and partner them together on that purchase because it's a new purchase.
But you can't live in it.
Can't live in it. Not even, like if you own it 1%, your IRA owns it 1%, you're a disqualified person, right? Partnering with your cousin, the cousin's not a disqualified person, so you can partner with your cousin at any time. Partnering with your spouse, again, on a new deal. A spouse is a disqualified person, so if you're going to partner with a spouse or spouse's IRA, it has to be on a new investment. Leasing the property to your siblings. So siblings are not a disqualified person. So if you have your IRA on a property, you want to rent it out, you can rent it to a sibling. They're not a disqualified person. Okay. So to give some examples, like with this scenario with equilibrium, is so if you have personal investment in equilibrium and you want to come in and add your IRA, you potentially might not be able to do that. But it really depends upon how much ownership, how much share of the fund that you guys own, right? So it's unlikely that you wouldn't be able to, but just know that, like, if you already personally have investment ownership and you want to add your IRA, it would at least need to be a question that would be asked: how much ownership do you personally have, right? If you have 50% ownership, then your IRA is not going to be able to come in and add to the investment. Yeah.
Even if it's two different equilibrium
No.
projects?
I'm assuming the same fund.
It's the same
There's two different funds, it's two different, transactions. Yeah. That was actually how we worked out the 10% ownership that we had before. So here's an example: invest in a private company. I mean, I'm using private company, we could also use private fund, right? Like equilibrium. So the IRA purchases the shares or purchases the percentage ownership in the company or in the fund. So again, the name of the investor is the Entrust Group for benefit of your name and account number. So our process is, so you have a subscription agreement. Equilibrium provides you a subscription agreement. It's in the name of the IRA as the investor. We ask our account holder to sign the document as read and approved. We have a process in place to be able to do this through HelloSign, DocuSign type thing, but we, for audit trail purposes, we're subject to regulatory audit. So when we have auditors come in and they say, pull 100 accounts and show us all the documents you have for the account opening, any investments they've done, any transfers they've done, they need to know, they need to see that you instructed us to do whatever investments. Again, these are self-directed IRAs. We're following your instructions. We're not selling you investments. We're not recommending them. But if you find one, you instruct us to make it. So this is part of our process. Vesting must be in the name of your IRA. The Entrust Group Inc. for benefit of is what FBO stands for. Your name, IRA number. Those aren't our account numbers. They start off 72300. So all revenue flows back into the retirement account. So again, you don't own the investment, the retirement account owns the investment. So if it pays a dividend, the dividend has to come to us to deposit into the retirement account. Once it's in the retirement account, you can do what you want. You can transfer it back to a different custodian, you can take a withdrawal, you can reinvest it, right? But the money has to get, and to go back to real estate, the rent doesn't go to the individual, the rent goes to the retirement account. And then your ability to invest in a private company or private fund could be affected by your own personal ownership in that company and fund, right? And that goes back to the prohibited transactions and disqualified persons. That section of the Internal Revenue Code, section 4975, gets really sort of gray and complicated in terms of when you get into private company ownership. That it talks about if you own more than 50%, then you can't. But if you're an executive, then and it doesn't even define executive, then it has to be less than 10%. It just gets really annoying. But there are specific things in that section of the Internal Revenue Code that you have to deal with when you're investing in a private company. IRA purchase a rental property. So we're in California, so Davis is a college town, so we use that as an example. You want to purchase a rental property in Davis, California. You have a child that's going to school at UC Davis. They can't stay in the property that your IRA owns, right? Even at fair market value, you can't stay there for free. They can't stay there, period, can't do any work on it. IRA can, as I mentioned, an IRA can borrow money to purchase real estate. And if your IRA borrows money, there is such thing called unrelated debt financed income tax. So the way the IRS looks at that is, let's say you have 50% down and your IRA borrows the other 50% and you make, say, $10,000 in net income that year, right? The IRS looks at it and says, well, 50% of that $10,000 came from non-IRA money. It came from this borrowed money, which means 50% of that $10,000 or $5,000 has to pay a tax, right? So if you decide at some point you want to invest in real estate and you're going to use borrowed money, note that you're going to have an expense called unrelated debt financed income tax.
I have a question, but
Yeah.
isn't your interest on the entire transaction can be a loss, like for the?
Well, yeah.
Because the IRAs,
Yeah.
you don't need to pay.
And I
taxes.
said net income, right? So if your net income ends up being a loss because of expenses, but typically you get a loss in rental property because you're depreciating the property. With the IRA, you don't depreciate the property, right? It's all cash flow. Either cash comes in, expense goes out, and you have a net income, right?
No,
But you're
I'm
not.
just asking if you can kind of transfer that because the IRA owns half, right? So if you can take that for the other individual that owns it with you and he can claim the 100%. So you don't have to.
Oh, you're
pay
talking about
for it.
partnering
Yeah.
as opposed to.
Yeah, in partnering. Let's
I don't think that the other individual can like claim.
say. Even if it's.
It would have to be 50% of everything, right? The individual owns 50%, so they would have to, like, anything they claim would be 50% of the total,
Got it,
right? This example, you have a family member that, in this case, a nephew who has some debt, and you want to help him out, and you're going to drop a promissory note and lend them the money from your IRA, and then they're going to pay the IRA back. So issues a $6,000 promissory note, 4.5% interest. I don't know if that's an attractive return, but that's the point is that's an investment you're allowed to make inside your IRA. You can loan money from your IRA. You can be a bank, and you can lend it to any other non-disqualified third party, but you need a promissory note. You need an investment document. We need the investment document. Again, we're subject to regulatory audits. They're going to come in. They're going to see what's the investment document in that file. For equilibrium, it's going to be a subscription agreement. And then lastly, so everything I've been talking about, specifically around owning real estate, assumes that your IRA is going to own the property directly. But there is a way for you to, and anytime a check needs to be written, like a bill gets sent to Entrust and we pay, we write the check from the retirement account. But there is a way for you to get checkbook control of your IRA, and that's through a single member LLC. So you establish an LLC where you name the IRA as the member or owner of the LLC, the Entrust Group, FBO, your name and account number. You can be the manager of the LLC. You create an operating agreement, name yourself the manager, open a bank account for the LLC, and then you instruct Entrust to fund that account, to fund the LLC. And now you as the manager, because you set up the LLC with you as manager, you now have the ability to write the checks from that bank account and make investment decisions, right? So sometimes people who are doing a lot of transactions, maybe investing in multiple properties, note investors a lot of times are doing a lot of notes. They want to have the ability to write their own checks, have checkbook control. That's how they do it, through a single member LLC. So the upside is to checkbook control. The downside is to it, there can be cost to create it, there can be a cost to maintain it, not to Entrust, but a cost to the state. In California, anybody know what cost in California to have an LLC? $800 a year to have an LLC. Now that's the most expensive in the country, but the fact remains is that's an expense that you would have to. So you got to really want to have checkbook control. But anyway, that's a way to do that inside your IRA, have checkbook control. There's actually a case that the IRS, that somebody had their IRA disqualified and they were doing this and they went to court. It's called the Swanson case, and they won, where they were using their IRA, their LLC, the single member IRA owned LLC, and the IRS disqualified it, and they took it to court and won. And so we all use that as the basis for telling people they can do single member LLCs in their IRA.
One more sentence. So it helps also with protection, right?
Yeah, I mean, liability protection. I mean, that's the concept. I don't know a lot about LLCs from that standpoint, but I can say that at one time I was doing a presentation where there was a discussion going on between attendees around the liability protection in an LLC versus in an IRA, and a lawyer was there, and he stood up and said a retirement account has every bit the liability protection that an LLC does. That's one person's opinion. I don't really have like a strong enough knowledge about LLCs in particular, but yeah, I mean, limited liability is in the name, right? Particularly when you're investing in real estate, where you're getting like potential for lawsuits and stuff that can, if somebody falls, an LLC could certainly help with that. But you do have that protection because it's owned inside an IRA. They can't sue you. You don't own the property, right? Your retirement account owns the property. So as far as the process, open an Entrust account. It takes 10 minutes through our online portal. Fund an account, which is either a contribution, you can make an annual contribution, you can transfer from an existing IRA or roll over from a 401k. Typically it takes about a week for a transfer or rollover to happen. And then purchase your asset, which involves you instructing Entrust to purchase the asset by sending us the investment documents. Again, with the case with Equilibrium, they're going to provide a subscription agreement that details the investment that you're making, the dollar amount, percentage ownership, vested in the name of your IRA, the Entrust Group FBO. They send it to us. We have a form called a bi-direction letter, which audit trail purposes, I keep coming back to that, that you fill out the name of the investment, how much you're investing, we match it up to the investment documents, and we send the money to Equilibrium, and now your IRA owns that investment. So, in summary, self-directed IRAs, it's about diversification. If you don't want to be limited to just stocks, bonds, and mutual funds, this allows you to do that, right? Again, I'm not saying you should. I'm not saying that like the stock market's bad or anything like that. This is just know that you can. You're allowed to do that if you want. And you know, you guys are here educating yourself about an investment opportunity. If you want to do it inside a retirement account, you know, we'll help you do that. You got to fit the right plan type, which we can help with that. Lots of investment options. It's really, you're only limited by your imagination. There are a ton of, I mean, one time somebody talked about that they invested in like a local band, like a rock band that they thought was going to hit big, so he helped finance it through his retirement account, like their, I don't know, albums and stuff. I mean, it's an investment. He was allowed to do it. And don't do anything that's prohibited. Don't engage with a disqualified person. Okay, that's the gist of it. Any more questions? I'm gonna be I'll obviously be sticking around, and I'm here like the whole weekend. And so, if you have any more questions, feel free to come up, and I have business cards and all that. So, question?
One question. You mentioned that in order to go from a traditional to a Roth IRA, you needed a year.
No, you don't. No, I was just using that. No, you don't need a year. I mean, can you like contribute to a traditional today and then turn around and like convert that to a Roth tomorrow? I think you probably could. I don't know that I would though. I think from my standpoint, just that it's not quite so obvious that you're sort of doing an end around that contribution limit, that I would contribute this year or convert it next year. But no, there's nothing that says you have to.
And that's the same trail you would follow from the 401k to
401k you go 401k, roll over to a traditional IRA, convert. So, and I'm being very specific in the terminology, because so when it goes from a 401k to an IRA, it's a conversion, or it's a rollover. When it goes from an IRA to an IRA, it's a transfer. When they're same type IRAs, traditional, Roth to Roth. To go from a traditional to a Roth is a conversion. If you realize you can't do that and you want to go from the Roth back to the traditional, it's a recharacterization. But recharacterizations have to be done the same year that you converted it, right? Once you get outside that year, then you're SOL. Anything else?
Are there any fees? What are the fees?
Our fees?
associated with
Yeah, we have fees.
application?
They're really not very much. We have a new account establishment fee, typically of $50. Actually, we have discounted fee. I'll give you with Equilibrium, we have discounted fees. We waive the new account establishment fee, which is normally $50. We have a transaction fee to process the investment, which is $95 if it's non-real estate, right? So Equilibrium, I understand, is investing in real estate, but their investment, their fund is through an LLC, right, you guys? So you would invest in an LLC. You wouldn't invest in property directly. Your IRA is not going to hold title on property. You're investing through an LLC. So that would be considered non-real estate. It's $95. If you're going to invest directly in real estate, own actual physical property, it's $175. Then once the asset is in the account, we have an annual fee that we give you a choice of either per asset fee of $250 a year. It's normally $299. Again, discounted fee for Equilibrium is $250 a year. And then, or there's a fee based on the value of the account. So if you have a lower dollar amount, then you can have a fee based on value. It could be less than $250 a year. But again, it's not much, right? I mean, if you know like what you're paying for mutual funds, like they're usually taking anywhere between 1% to 3%. I mean, $250 a year, if you have a $100,000 investment, that's 0.25 per year. You're at 0.25%, right? Dramatically less than, and that's not just, the self-directed industry is not very expensive. Like we have competitors, some are more than us, some are less than us, but we're all sort of fall in this range that if you compare to brokerage firms, is dramatically less. Okay? All right. Thanks, everybody.